Imagine opening your banking app one morning and seeing a credit score so high that lenders compete to offer you the best deals instead of rejecting you. An 800-plus credit score isn't just a number in the United States, it's a financial passport. It unlocks lower interest rates, premium credit cards, better insurance pricing, and even stronger negotiating power when buying a home or car. The crazy part is this: most people think it takes years or decades to get there. But in reality, with the right strategy and discipline, you can push your score into that elite range within 6 to 12 months. And no, it's not about luck or income level. It's about understanding how the system actually works and using it smarter than everyone else. To begin with, you need to understand that your credit score, especially your FICO score, is not random. It's built on a few core factors that banks and lenders use to judge your reliability. The biggest one is your payment history. This alone makes up a massive portion of your score, which means even one late payment can drag you down significantly. So the first rule is simple but powerful: never miss a payment. Set up autopay for every credit card, loan, and bill tied to your credit profile. Even if you only pay the minimum, consistency builds trust with lenders, and that trust directly translates into a higher score. The second major factor is credit utilization, and this is where most people go wrong. Utilization is how much of your available credit you're using at any given time. If your credit limit is $10,000 and you're using $7,000, that's 70% utilization, which signals risk to lenders. But if you keep it below 10%, you look extremely responsible. The strategy here is not just spending less, but timing your payments strategically. Many high scorers actually pay their credit cards multiple times a month to keep balances low before the statement closes. This makes it look like they barely use credit, even if they do. Now here's a powerful move that many people overlook. Becoming an authorized user on someone else's credit card can boost your score dramatically. It's like borrowing their credibility. Another key piece of the puzzle is your credit mix and account age. The longer your accounts have been open, the better. That's why closing old credit cards can actually hurt your score. Now let's talk about hard inquiries, which happen every time you apply for new credit. Too many applications in a short period can signal desperation, which lowers your score temporarily. High scorers don't just manage their credit, they optimize it by checking reports, fixing errors, and